Imagine telling your AI assistant to just book you a luxury vacation to Rome.
Right, and you don't even click anything.
Exactly. The AI finds the flights, it secures the hotel, maybe negotiates a late checkout, and then it just pays for it.
Which is still a little wild to think about.
Right. But the real question is, who do you actually trust to hold the wallet for that AI?
Yes, someone has to be verifying that the bot isn't being scanned by a fake hotel site.
Or that, a rogue line of code isn't buying 10 first-class tickets by mistake.
Oh, yeah, that would be a nightmare.
A total disaster. Well, welcome to today's deep dive. We are looking at a massive stack of source material today.
We really are.
Yeah, we've got American Express's 2025 annual report and their Form 10-K, officially released in March 2026.
Hot off the presses.
Exactly. And our mission for you today is to uncover how a 175-year-old traditional financial behemoth is completely rewiring itself.
From the inside out.
Yes, to become basically the security guard for the bot-to-bot economy.
And they are attempting this massive technological pivot while carrying the immense burden of modern regulatory frameworks.
Which is not easy.
No, not at all. We are looking at a legacy institution trying to outmaneuver agile global competition and, intense merchant pushback.
All without breaking the foundational trust that built their brand over nearly 2 centuries.
Right. That's the tightrope walk.
So we are going to synthesize these incredibly dense financial and regulatory filings into actionable insights for you.
Because they are incredibly dense.
Oh, they're like reading a phone book. But to understand where Amex is going with autonomous AI, we first have to understand who is currently fueling their war chest.
And the raw numbers from 2025 are staggering.
They really are. Listen to this. Amex posted $72 billion in revenue.
Wow.
Yeah, which is a 10% increase from the previous year. Their earnings per share jumped 15%, and they acquired 12.5 million new proprietary cards.
That's huge.
But the data point that demands the most attention is the demographic breakdown.
This is the crazy part.
Right. 65% of their new consumer accounts are millennials and Gen Z.
I mean, capturing that specific demographic at that volume is a monumental achievement.
Especially for them.
Exactly. For a brand that historically was associated with, older corporate executives.
Right, the stereotypical boomer businessman.
Yeah.
But get this. The average age of a new U.S. Consumer Platinum card holder is now 33.
33. That's so young for that card.
And for the Gold card, it is 29.
Wow.
Furthermore, 70% of their new accounts are on fee-paying products.
So we aren't talking about free entry-level credit cards here.
No, we are talking about products with annual fees that can run into the hundreds of dollars.
Right.
And this specific young demographic is driving 30 consecutive quarters of double-digit net card fee revenue growth for the company.
30 quarters.
Yeah. Okay, let's unpack this because my initial reaction is that it's like a heritage luxury watchmaker suddenly dominating the smartwatch market for 20-somethings.
That's a really good analogy, actually.
Thanks. But seriously, how did a historical status symbol become the default expensive wallet essential for a 29-year-old?
Well, what's fascinating here is how Amex has fundamentally re-engineered the mechanics of their perceived value.
Okay, how so?
They have leaned heavily into what they call their membership model.
Right. I've seen that phrase all over the 10K.
Yeah, and to understand why this works, you have to look at the structural difference between Amex and its competitors.
You mean like Visa and MasterCard?
Exactly. Visa and MasterCard operate what we call an open-loop network.
Open loop, okay.
They are essentially just toll bridges connecting the consumer's bank to the merchant's bank.
So they just move the money.
Right. They process the payment, but they don't hold the accounts. Amex, on the other hand, operates a closed-loop network.
Meaning they're the bridge, but also the bank.
Yes, they are the bank on both sides. They issue the card to the consumer, and they directly acquire the transaction from the merchant.
Ah, so because they own the entire pipeline, they see every detail of the transaction.
Exactly. They don't just see that you spent $200 at a restaurant.
They see the granular data that open-loop networks are completely blind to.
Right. And they use that incredibly rich first-party data to shift the value proposition away from pure credit.
Because, a 29-year-old doesn't necessarily need a premium card just to borrow money.
Exactly. Amex uses the data to curate highly specific experiential lifestyle access.
Like the dining stuff.
Yes, look at their 2025 acquisitions and partnerships in the dining space. They integrated with TikTok, Room, and Toast.
All big players.
Right, bringing all of those platforms into their Resi hospitality network.
So they are building an ecosystem where that annual fee buys you priority access.
Exactly. Priority access to a reserved table at a highly sought-after restaurant or exclusive pre-sale tickets to Formula One events.
So the physical heavy metal card is less about the metal itself and more about the velvet rope it lifts.
That's a perfect way to put it.
You are paying a premium to guarantee your lifestyle is frictionless and exclusive.
And because of that closed-loop data, Amex knows exactly which velvet ropes their younger demographic wants lifted.
Because they can see the spending on both ends.
Exactly. They see the spending patterns on both the consumer side and the merchant side, allowing them to proactively tailor those benefits.
I see.
So they can approach a highly rated talk restaurant and offer to fill their empty Tuesday night tables with high-spending Amex members.
Creating a win-win scenario fueled entirely by data visibility.
Precisely.
Okay, but keeping those velvet ropes lifted requires a massive network of external partnerships.
Massive.
And digging into the 10K, this reliance on partners brings us to a significant tension point.
The co-brand deals.
Yeah, their ecosystem of co-branded cards is vast. The filings show they renewed major deals with British Airways, ANA, and Air France-KLM.
They even launched a crypto-adjacent card.
Right, the Coinbase One card, signaling a clear nod to that younger demographic we just discussed.
But there's one partnership that dwarfs all the others.
Yeah, the elephant in the room. According to the 10K, the Delta Airlines co-brand portfolio accounts for 13% of Amex's worldwide billed business.
Which is a staggering number.
It really is. And even more concerning, it accounts for 21% of their total card member loans.
Over a fifth of the loans.
Yeah. I have to push back on this business model.
Okay, lay on me.
If over a fifth of your loan portfolio is tied to a single airline partner, aren't you essentially a hostage to Delta's boardroom decisions?
Well, if we connect this to the bigger picture, you are identifying the delicate high-wire act of managing a multi-sided market.
It just seems so risky.
And concentration risk with Delta is a highly scrutinized metric by their investors.
I bet.
However, the depth of that integration also creates a powerful defensive moat.
How so?
Delta is deeply embedded in the membership rewards program, right? They provide the airport lounge access that premium cardholders demand.
That's true. The Sky Clubs are a huge perk.
Exactly. Plus, they are a massive corporate payments customer of Amex, and they are one of Amex's largest merchants.
So it goes both ways.
Yes. Unwinding that symbiotic relationship would be catastrophic for both parties.
Making it incredibly difficult for a competitor to simply swoop in.
Right. You can't just offer Delta a slightly better processing rate and expect them to walk away from all of that infrastructure.
Okay, I see your point.
Right.
But even if the Delta relationship is secure, the 10K reveals intense global pressure on the other side of that multi-sided market.
You mean the everyday merchants?
Exactly. Think about it. If I am a coffee shop owner and I have to pay a much higher processing fee to accept an Amex card compared to a Visa, I'm going to try to convince my customers to use something else.
Of course.
And the filings outline that this isn't just a theoretical problem. The Australian Central Bank is actively reviewing the practice of merchant surcharging.
Which allows businesses to pass that higher fee directly to the consumer.
Right. And in the European Union, the Court of Justice of the European Union, the CJEU, is currently ruling on whether regulatory fee caps apply to Amex's co-brand and agent arrangements.
It's a huge legal battle right now.
So if a barista tells me it costs 3% extra to use my Amex, or if a government caps the fees Amex can collect, doesn't that fundamentally crack the foundation of the premium card model?
It absolutely threatens it. The mechanism you are describing is the merchant discount rate, or MDR.
The fee the store pays to accept the card.
Exactly. Amex's MDR is generally higher than its competitors. And that premium is exactly what funds the lounge access, the Resi reservations, and the points that consumers love.
It's a closed loop of cash.
Right. If merchants successfully steer customers away, or if regulators artificially cap those fees, like we see discussed in the CJEU case, the funding mechanism for those premium rewards evaporates.
So what do?
Amex has to constantly prove to merchants that an Amex card member is inherently more valuable.
Like proving they'll spend more.
Yes, they have to demonstrate that the 29-year-old gold cardholder spends more per visit and is more loyal, making the higher MDR a worthwhile marketing expense for the business.
Basically saying, yes, we cost more, but we bring you the whales.
Exactly. And the numbers in the report suggest they are managing that friction relatively well.
Yeah, their international spend is 50% larger than it was just 3 years ago.
Right, indicating that merchants globally are accepting the value proposition.
But The 10K clearly warns about the broader threat of commoditization.
From fintechs, mostly.
Yeah, fintech startups with radically lower structural costs combined with government-mandated open banking initiatives.
They are threatening to make traditional payment networks invisible.
Right, because if a payment is just a standardized data transfer moving through cheap, invisible pipes, a premium brand has a massive problem.
And facing that specific threat of commoditization is what is driving Amex's most aggressive strategic pivot.
This is where we get to the AI stuff.
Exactly. They are looking past the mobile app and betting on a paradigm shift in how commerce itself is initiated.
Yeah, the annual report states explicitly that we are moving into the era of agentic commerce.
And we really need to clarify the difference here for the listeners.
Let's do it. Generative AI is what we are used to, right? It drafts an email or suggests a vacation itinerary, but you still have to take the action.
You still have to click buy.
Right. Agentic AI acts autonomously on your behalf.
It takes the action for you.
We're talking about AI agents booking those flights, replenishing a business's inventory, and initiating payments without a human ever clicking a checkout button.
And in response to this, Amex announced they are releasing the ACE Developer Kit.
The Agentic Commerce Experiences Kit,
Yes, coming out in April 2026.
right around the corner.
They are designing the software tools to embed Amex payment pipelines directly into these new AI ecosystems.
So they are making their Resi dining inventory and their Amex travel assets fully discoverable by leading AI platforms via API integrations.
Because they are recognizing a radical shift in the point of sale.
It's totally changing.
Right. The point of sale is no longer a physical terminal at a cash register, and it is rapidly moving away from a traditional e-commerce checkout page.
The new point of sale is the conversation you have with your AI assistant.
Exactly.
Here's where it gets really interesting to me. Think about my analogy from earlier.
The smart shopping advisor.
Yeah. We are moving from an AI acting as a smart shopping advisor who whispers recommendations in your ear to an AI acting as a chauffeur whom we've handed our actual physical wallet.
It's a massive leap in trust.
It is. We are telling the bot to go get the best hotel in Rome and just pay for it.
Just take care of it.
Right. But if a piece of code is executing the transaction, how does brand loyalty survive?
That is the million-dollar question.
Right. An AI agent doesn't care about the prestige of a heavy metal card. It doesn't feel a sense of status when it secures a table on TikTok. It just executes a command.
And this raises an important question, and it is the exact challenge Amex's leadership is attempting to solve with the ACE Developer Kit.
So how do they solve it?
Well, in a bot-to-bot economy, the company that wins the transaction won't be the one providing the cheapest payment pipes.
It won't.
No, the winner will be the entity that can provide absolute trust, identity authorization, and liability management.
Liability management. Because the risk profile changes entirely.
Totally changes.
If my AI assistant hallucinates, goes rogue, and buys 10 luxury watches by mistake, someone has to unwind that mess.
Someone holds the liability.
Exactly.
And AI making autonomous financial decisions creates unprecedented layers of risk.
I can only imagine.
When a bot tries to spend your money, the network has to ask, who authorized this bot? How do we mathematically prove the bot belongs to you?
Right, is this my bot or a hacker's bot?
Exactly. And who holds the liability for a fraudulent autonomous purchase?
Which is where Amex's legacy structure comes in.
Yes, that closed-loop system we discussed earlier becomes its greatest future asset.
Because they see everything.
Because Amex sees both the merchant side and the consumer side of the data, they believe they are positioned to be the ultimate trusted security layer for AI agents.
So they aren't just processing the payment.
No, they are verifying the intent and the identity on both ends of the transaction in real time.
Oh, wow. They are betting that in a world of autonomous bots running around the internet spending money, you are going to want a 175-year-old security guard watching your digital wallet.
Rather than, a 2-year-old startup.
Exactly. They want to ensure that when your AI books that hotel in Rome, it automatically knows to route the payment through Amex to trigger your late checkout benefits.
And that the transaction is shielded by Amex's institutional fraud protection.
But building a network where AI bots can securely transact with other AI bots in milliseconds, that requires an internal technological overhaul.
Oh, absolutely.
And the deep dive into the 10K reveals how Amex is rewiring its own workforce to meet this challenge.
The engineering numbers are wild.
They are. They've scaled AI-assisted development tools to over 11,000 engineering professionals across the company.
11,000.
Right. And they report this has cut coding cycle times by over 30%.
30% faster is incredible for a bank.
They are also launching AI agents for commercial expense reporting, fueled by their recent acquisition of a software company called Center.
This is huge for corporate clients.
Yeah, it allows an AI to automate receipt capture, verify corporate policy compliance, and issue approvals without human intervention.
It's all moving so fast.
The speed of that development is impressive, but reading the 10K's risk disclosures outlines the dark side of that exact same technology.
The cyber threats.
Yes, they list severe existential threats to their infrastructure. AI-assisted deepfakes bypassing biometric security,
Scary stuff.
quantum computing threats capable of breaking current encryption standards, and highly sophisticated state-sponsored cyber attacks.
And remember, Amex is not just a tech company.
No, they are heavily regulated. They are designated as a Category 3 banking organization in the United States.
And that designation carries immense operational weight.
I'm sure it does.
It means they are subjected to intense Federal Reserve stress tests known as CCRR.
Right.
They have a mandated 2.5% stress capital buffer, or SCB.
Which locks up a lot of cash.
And they also have to adhere to strict liquidity coverage ratios and net stable funding ratios.
Let's translate those terms for the listener.
Yeah.
Because they are crucial to understanding the burden Amex operates under.
Yeah, let's break it down.
The stress capital buffer means that for every $100 they lend out, the government forces them to hold a specific percentage of capital in reserve purely for theoretical doomsday economic scenarios.
Exactly.
And the liquidity coverage ratios essentially mean the government forces them to keep enough highly liquid assets on hand like cash or government bonds to survive a 30-day crisis where everyone is panicking and pulling their money out.
Right. And fintech startups do not have these massive capital anchors tied to their ankles.
Right. So what does this all mean? Here's my paradox for you.
Okay.
If Amex is successfully using AI to code 30% faster, malicious state-sponsored hackers are absolutely using the exact same generative AI to attack them 30% faster.
Oh, without a doubt.
How does a heavily regulated bank, bogged down by federal stress tests and massive liquidity requirements, move fast enough to survive a real-time, automated cyber arms race?
It is the defining operational challenge of modern financial infrastructure.
It seems impossible.
Well, to combat this incredibly fast threat landscape, Amex has developed what they call their TURIAS program.
TURIAS.
Yes, Technology Risk and Information Security. This is an enterprise-wide shield that integrates advanced security protocols into every single technology investment they make.
So security isn't just an afterthought.
Right. It's built into the foundation. You highlighted a crucial tension, the move fast and break things ethos of a Silicon Valley fintech versus the heavy burden of systemic economic importance that Amex carries.
Because a startup can pivot its entire business model over a weekend.
Yes, but Amex has to submit a multi-thousand-page capital plan to the Federal Reserve every year just to legally prove they could survive a massive economic collapse.
It feels like an unfair fight. The startup gets to sprint, while Amex has to run a marathon wearing a weighted vest.
It does feel that way, but while it slows them down internally, that weighted vest is precisely the value proposition in an agentic commerce world.
How so?
Think about it. In an era of incredibly convincing deepfakes, where AI voices can flawlessly mimic a CEO authorizing a wire transfer.
Which happens now.
Exactly. And where autonomous bots are executing thousands of microtransactions a second, the landscape of trust is fundamentally altering.
Oh, I see.
The very things that slow Amex down, that heavy regulatory oversight, the Category 3 of banking rules, the institutional paranoia required to pass a Federal Reserve stress test.
That's the selling point.
Yes, that is the exact structural integrity that will make consumers and corporate clients trust Amex with their money.
Because a nimble startup might build a sleeker user interface.
But when the cyber environment is actively hostile, customers seek the fortress. Amex's regulatory burden forces them, by law, to maintain the fortress.
The red tape is actually the structural reinforcement of the vault door.
Beautifully said.
They are taking the speed and capability of AI and wrapping it inside the rigid, highly scrutinized risk management framework of a globally regulated bank.
They're essentially betting that security and trust will become the ultimate premium products in an AI-driven economy.
Wow. Okay, let's bring the pieces of this puzzle together.
It's a lot to process.
We've watched a fascinating narrative unfold in these 2025 documents today. We've seen Amex successfully capture a massive youth movement,
Millennials and Gen Z.
right, leveraging experiential dining and travel perks to bring them in, driving record $72 billion revenues.
Record break him.
And they are taking those massive profits and using them to fund a high-stakes pivot toward an agentic commerce future.
Releasing developer kits like ACE to embed their payment pipes into the bot economy.
Exactly. And they are attempting all of this while navigating a gauntlet of global merchant pushback, intense regulatory scrutiny, and an automated cyberarms race.
It is a profound balancing act. They are operating at the absolute bleeding edge of software development while remaining anchored by nearly 2 centuries of traditional financial risk management.
Which brings me to a final lingering thought for you to take away today.
What have you got?
It is drawn from a quiet, easily overlooked corner of the 10K's regulatory section.
Okay.
There is a new rule from the Consumer Financial Protection Bureau, the CFPB, regarding personal financial data rights.
Oh, the open banking rule?
Yes, it is a massive government push for open banking. Essentially, this rule would require financial institutions to let consumers seamlessly port their transaction data to third parties securely and for free.
And the intention behind the rule is to increase market competition, allowing a consumer to easily take their rich transaction history to a rival bank or a new fintech app to get a better loan rate or better rewards.
Right. But think about the core of Amex's entire strategy that we just spent this deep dive exploring.
The closed loop.
Exactly. Their biggest historical advantage, the engine that powers their membership model, the data that lets them curate Resi dining experiences, and the visibility that makes them the trusted security layer for AI agents.
It all relies on it.
Yes, all of it relies on their proprietary closed-loop network. They own the data because they own both sides of the transaction.
Right.
So if the future of finance, mandated by the government, dictates that all data must be open, portable, and easily shared with competitors, does Amex's greatest asset eventually become obsolete?
That is the ultimate question.
Can a closed-loop fortress survive in an open banking world? It's something for you to ponder the next time you drop your card on the table. Or, more likely, the next time your AI agent silently negotiates and pays the bill for you in the cloud.